Welcome back, everybody. SF Live episode number 90. This is the second episode today on this Tuesday. And in a few minutes, or a few seconds actually, I'll be joined by Kevin Bullock. He's the president and CEO of Anaconda Mining. But before we get to Kevin, please be reminded to use hashtag AskANX. That's the company's ticker here on the Toronto Venture Exchange. And to get your questions in. This format is for you, the audience, not for us. It's really to get you interacting with management and get you the latest information that you might need to make any investment decisions that you should double check with your investment advisor before you do them. Really, really, really important. And also follow us here on Twitter. Make sure you hit the alert button. That's the little bell icon in our profile when you follow us. And also follow us on YouTube. Subscribe to our channel and hit the alert and notification button there as well. That way you get notified when we upload our latest interviews. Leave a comment, leave a like. We always like to hear from you. Now it is my pleasure to introduce Mr. Kevin Bullock. He's the president and CEO of Anaconda Mining, but you're also director of B2 Gold. So it's great to have you on, Kevin. How are you doing?
I'm doing great, and thanks for having me on. I'm looking forward to this.
It's a great pleasure. We've been chatting on and off for the last 6 months as well. I think I've hosted a panel where you were on recently as well, as part of Liam Hardy's Spotlight Mining. I think it was
Correct.
the Gold Rush Challenge or something like that. It was great chatting with you there, and it's good to catch up now and see what has happened in the last 6 months as well. But before we dive into it, give us an update or run us through the Anaconda story real quick in 30, 60 seconds and get us all up to speed.
So Anaconda is a company that's been producing in Eastern Canada for over 10 years now. And they've had between 18 and 20,000 ounces of production. And a good year was when the gold price went up a bit, and a bad year was when the gold price went down a bit. And it was more it should have, in my view, been a private company. It didn't have a focus for growth. And I was brought on a little under 2 years ago to provide that focus. And, when I saw the amount of the type of assets that they had and the operating that team that they had in Newfoundland, I thought this is fantastic, making that kind of money on a project that's running between 1.5 and 2 grams in northern Newfoundland in a harsh climate. I thought that's got to be one good operating team. So when I saw the assets and saw the operating team, I thought all this needs is a qualified, executive and financial team to move forward and really grow this into something that's quite special. And, my experience with taking IAMGOLD public in the 90s and moving to Africa and open that and taking Kirkland Lake Gold public from its predecessor of Fox Point Resources and negotiating the Macassa mine purchase and getting that going. And then my own company, Volta, which I started from scratch. And the reason I'm on B2 Gold is it was acquired by them for over $100 million. So I've had successes based on looking at the right type of assets and getting the right people combined with them. So I've been asked to provide growth, and we now have a very, very strong platform and a focus to try and get to 150,000 ounces a year from our current state. It's a very aggressive target, but it's doable with the assets that we have. So, we are about now implementing that process, and we're well underway.
Okay, fantastic. You said you've been there for 2 years now, and to be honest, not much, at least on surface, has changed. At least at first glance, you're still producing 19,000 ounces. What have you done to get to this point now that you can actually produce a ton of free cash flow that you are right now? What have you done in the last 2 years? Run us through that as well.
So the company used to have a lot of focus on technology, not using it, but developing it, and that took a lot of the cash flow away from growing the company as a gold producer. So what we've done in the last 2 years is we've spun that company off. It's now called Nova Mera, and it's got its own investment from other areas and not ourselves. So we own about 33% of Nova Mera, which is a technology company looking at different technologies for narrow vein mining and other things. We also had a lot of grassroots exploration that we spun off into another company called Magneterra that we own a third of, about 33% off, and it now funds itself. It's a listed company. So we've taken away all that expenditure that was going on things that weren't there to grow the company, and we've managed to now build up our cash balance and focus on the things that we need to focus on. So we have a three-pronged approach to gain that 150,000 ounce a year status. One is to internally discover in the advanced exploration projects that we have near our mill that's truckable to the mill. In other words, we can leverage our facilities to move faster than anybody else in Newfoundland. We're the only producing mill in Newfoundland. The second approach is to develop internally. So we acquired a project a couple of years back, and we're now in a definitive feasibility mode on something that's becoming quite a decent size undertaking and looking better and better as we move through it. And then the third portion, which is what'll probably makes people stop scratching their heads about the 150,000 ounces is we want to tack on at the right time, probably near the end of this process, an M&A transaction of bite size that'll be accretive to us.
Fantastic, and that's very decisive. Like, it sounds like a 2-year overnight success, right? So it's taken 2 years to get to this point.
Always is.
Right? People don't see the hard work that's going in there. That's why my question was a bit cheeky, but like, I know it takes some time to implement certain changes as well. And you're
and I'd like to. Sorry, Kai. I'd also like to state that internally and externally, we've made a lot of changes. We've obviously, with the start of me, we've changed it up to CEO and president. The COO is no longer with us. The project manager at Goldboro, the consultant at Goldboro. We've made those changes that are not easy. It's like going to the dentist. It feels terrible while you're doing it, but boy, oh boy, it feels good when it's finished. So we're at that point now where the freezing is worn off and the teeth feel okay, and we're moving forward with the right people in place to do what we want to do. There's always been the right projects. We just want to execute.
Okay, fantastic. Let's focus for a second on the existing operation. You produced 5,400 ounces last quarter. Run us through some KPIs there and give us an update on how the quarter went.
Yeah, so our guidance this year is 18 to 19,000 ounces, and we want to do that at around $900 cash cost US. Our all-in costs right now are sitting at about $1,150, which is where we want to be, $1,150 to $1,250. The first half of this year, we sold just under 9,000 ounces, so we're on track. This third quarter, we've done very well, as you stated, and our actual financials to follow that in the next few weeks will come out. We generated metal revenue of $19 million in the first half of this year, and we realized an EBITDA at project level of nearly $8 million. This generated $5.8 million in operating cash flow from the operation, after taxes, after drilling, after corporate overhead. And we even had a profit of $3.5 million for the first 6 months. So it's been a fantastic start. Third quarter is even better, and we'll see that with the news, obviously, because the gold price is higher. So our delta is quite large for a small company. If we're sitting on about $700 Canadian delta between our sales and our all-in costs.
Oh, fantastic. And that's, of course, growing the balance sheet, as you said. You're sitting at $14 million as of September 30th. You also did a financing for $5.5 million. And as a producer, what did you raise the money for, and who came into that private placement?
So we're fully funded to carry out all our projects. However, when we're trying to get an institutional base in our shareholding, because we've always been a retail company, and we need more institutional coverage and investment. So we started pushing on that front and talking and going to various conferences and talking to various people on websites. And we had an interest from SSI, which is a very well-respected Swiss fund, that wanted us to be more aggressive in our expenditure on Tilt Cove, which is the exploration project 40 kilometers east of our mine, where we believe there's other deposits to be found that are similar grade to the past producing mine that they surround, called Nugget Pond, which mined at about just under 10 grams per ton diluted grade. If we were to find something there, it's truckable to our mill. It's 5 times higher grade than we're currently mining. It would change the company completely with just one drill hole. And they wanted us to be more aggressive with it. So we actually did the entire deal with them. It was a charity flow through whereby we got a premium. They paid market price as back-end buyers. So the thing with charity flow through is if you find the back-end buyers and know that they're long-term holders, it's very advantageous for the company and very advantageous for the buyer. So they now own 5% of our company, and we're trying to increase the institutional ownership, which sits at about 17%.
Fantastic. No, I know Florian well, and he usually supports stories all the way to the end, which is fantastic to know as well. And of course, having that back-end buyer, you won't see the flow-through shares being sold to the market for the tax benefit as well. So
exactly right.
That makes a huge difference as well for you as a company. Let's talk about Tilt Cove and your plans there. We talked about the production. Let's talk about the exploration, and then we'll talk about Goldboro as well. But let's start Tilt Cove. What are the plans now that you have the money in the till in terms of exploration?
So the strategy for Newfoundland on its own is to keep the mill going at Point Rouge. So we have nearby deposits that we're drilling, and we've just started mining the Argyle deposit, which is our next mine, and we're drilling Zone 278, which is the one that's going to be after that, we believe. For the long-term future, we've picked up Tilt Cove. It took us 2 years to acquire all the projects from various prospectors and do our own staking to pick up the entire 20-kilometer strike length of the entire greenstone belt that straddles the past producer. And it's a banded iron formation. In other words, you can pick it up really well with geophysics. And the banded ironstone formation, it stretches through the entire 20 kilometers and has many, many targets on it that haven't been tested in the past. And there was a 7-kilometer stretch of it that was under a watershed protection for a local community. That we found out that the government of Newfoundland sometimes combines communities to cut back on government facilities and government plowing and power, etc. And the nearby community no longer exists as an incorporated community. It's only 2 houses that are left. So we managed to get the watershed lifted. So something that hasn't been drilled in 25 years, 7 kilometers of strike next to a past producer at 10 grams, 40 kilometers away from a mill, the only mill in Newfoundland that's producing gold, which happens to be ours, is an exciting place to drill. So we've got a 10,000 meter drill program started now with the funds that we raised through flow through. So we'll be aggressive on that, testing numerous targets. We have 13 main targets and hundreds of secondary targets on that trend in a first world that really haven't been tested before. It's fantastic.
Now, are you experiencing any of the newfound gold rush hype, or are you seeing any of that? I've seen a lot of activity around the Ghana gold belt or that area as well. Any of that reflecting on you?
Yeah, it's not necessarily just them. It's a lot of people are coming into Newfoundland since the Atlantic Gold story. Our Goldboro Gold project is on the eastern end of a series of deposits that were acquired by St. Barbara when they bought Atlantic Gold for $722 million. And Goldboro now is the largest single deposit in the province. It's very exciting for us. So we see a lot of people coming in, but the effect from Newfound Gold for us is that they're doing such a large drill program, along with others. It's hard to find experienced drillers and also lab time. Fortunately, we've negotiated to be with a lab that we've been using for years to get our actual results are coming back within 10 days, which is nobody else is getting.
Fantastic.
That. It's fantastic. We're paying a bit more for it, but it's worth it.
Yeah, it's like nobody in Canada has 10-day turnaround time these days. It's incredible. So labs are clogged up there as well. Before we talk about Goldboro, just real quick, you mentioned something, finding drillers and also labs to a degree, or lab technicians actually. The Maritimes is still locked off in terms of COVID. Like, how is that affecting your work right now?
So it doesn't affect us at site. We're on the Bay Verte Peninsula where we produce gold, which is its own bubble within the island of Newfoundland, which is its own bubble. So we're in a bubble within a bubble, and then we're in the Atlantic bubble. So we're very well protected. We've never had a case. I don't think there are any active cases on the island of Newfoundland. If there are, there's 1 or 2 in St. John's. There weren't a month ago, and I don't know about today. So we've never been affected by COVID from a point of having to slow down at the operation or having any issues at the operation. In fact, we're not spending as much on travel. Not necessarily a good thing that I can't get out to site and do my reviews and everything, but we're saving a lot of money on travel and other things pre-COVID. And COVID obviously in some ways affects the gold price. So we've got a high gold price and we're not spending as much. So we've made more since COVID than before. On the negative side, COVID is affecting us in our strategy to go and find other assets around the world, do property visits, get people to site to start coverage, institutional coverage, all those sorts of things that you want to do as a company to have this momentum-based following and get the institutional holding up is kind of slower, not kind of, it is slower than pre-COVID.
Yeah, no, that makes sense. And let's talk about Goldboro. And I got in my notes that you were planning a feasibility study for year-end. And we were talking off mic before that might have changed, or there might be changes looming. Give us a rundown on Goldboro.
So when we made all the changes internally and really looked at the deposit and the permitting, and we announced this, the timeline for the permitting was somebody was looking through rose-colored glasses. It's going to be a lot longer than we first started. So the the fastest we'll have permits to build Goldboro is the end of next year. So we had time to look at optimizing the project from where it was at. And we did end up changing internally and our external consultants and looking at it a little differently and remodeling the deposit. And when doing that, we realized that the deposit is going to be a much larger deposit as far as gold ounces go. And it's going to take longer to do the feasibility work. And we have time. It is not the bottleneck. Permitting is. So in looking at that, we did a lot of infill drilling, understanding the project a lot better and incorporating all that. And it's looking now that it's going to be a much larger and more robust project than we originally thought, which requires more time to work. We're working through timelines and budgets right now of what that's going to look like. It still won't be the bottleneck, but I can't give you timing of when that feasibility will be ready. We are, however, Kai, still going to put out by the end of the year the new resource, which is based on a lot more drilling. So we can see this 1.4 million ounce largest deposit in Nova Scotia becoming much bigger by the end of the year.
Fantastic. Let's. I want to drill down a little more on the business plan. You got three avenues you mentioned: it's M&A, it's exploration, and what's the
development.
That one. Drawing a blank there. But I want to talk more about M&A and financial flexibility as well. You have roughly 70 million market cap, right around there, maybe 75. You're generating cash, and one thing is like, what's your financial flexibility in terms of M&A? Like, what are you looking at acquiring, and how much can you actually spend? So, and how much leverage can you take on the producing assets? So I'm quite curious about that as well.
So we wouldn't take on leverage on the producing asset to do an acquisition. We wouldn't spend cash on an acquisition. What we're looking at for an acquisition is a paper deal of like companies that together would make more sense and be accretive for both sets of shareholders. So we look at things that are bite-sized for us. And when I say bite-sized, it's anything up to the similar market cap as ourselves that combined would be much better. We look around where we are, but we throw ever larger circles around, and we do look globally. We understand that mineralization doesn't stop at political boundaries, doesn't respect political boundaries, but we do. So we do not go anywhere that's going to be unsafe or a difficult place to work, or even the perception that it's a difficult place to work. As you know, I tried to push a string uphill for 10 years working in West Africa. Greatest place I've ever worked, but people perceived it as difficult. So we look around and we're looking for an asset that's going to be accretive to us. And when you say, we're a 75 million market cap, that's where we're at now. We think when we meet our goals that we're talking about already and discovering something and moving Goldboro forward, that will be worth more, and that'll give us more opportunity in the M&A space. So we have an active M&A program, about 60 projects worldwide that we keep an eye on. We've made a couple of project visits pre-COVID, and then it kind of slowed down. So that's how COVID's hurting us, is definitely on the M&A front, to go and do property reviews and visit people face to face is important when you look at an M&A. For talking about a project and everything, this is great, but you really got to see the whites of people's eyes when you start getting serious.
Yeah, no, that makes a lot of sense, and it's seeing is believing as well, right? Even if you just step out of the plane and look around for 2 minutes and you step back on and you fly back home, that's just sometimes all you need. I've been in Botswana before, and I've never heard anything about it, but I've seen that's one of the most civilized countries I've ever visited. But for most of investors, it's just a black hole and nobody knows what's going on, right?
That's exactly the issue, right? It's exactly the issue in a lot of places.
So, I want to drill down just for a second here on accretive. You use that, and you are more Maritimes focused. You got Newfoundland and Nova Scotia, your assets. Like, how far are you willing actually to step away from your home base, and how do you define accretive in that regard? Like for me, accretive it has to be close to home. Like different time zones are already difficult. So how do you define that?
Well, accretive, there's many ways to look at something that's accretive, because you have a certain audience who's willing to look at your story and perhaps become a shareholder based on various things. And one of them is the amount of production annually. So right now people will say, well, you're less than 20,000 ounces a year. What's the point of investing in you? Well, so doubling that with somebody else who's getting the same kind of thing is accretive, because if you have your own growth strategy and you get together with someone with a similar strategy that you're both doing 20,000, about to build a 60,000 ounce a year producer, you become something that's about to be 150,000 as opposed to be about 75,000. And you get a wider audience, and therefore you get more eyes on the story, and it's easier to promote. That's accretive. We have a team that we can leverage off that doesn't have to be nearby. We have facilities that can be leveraged whereby the deal to be accretive would have to be nearby and truckable. So there's various things. So we'll look as far as we need to look for the right deal. Obviously, it's better if it's closer to home. But you know what? You don't stop there and say, well, there's nothing available, therefore, I'm not looking for an M&A anymore. We can go worldwide. I mean, a company that's been so successful with that I'm a director of is B2 Gold. I mean, they're all over the world. And they know how to operate in these places, and they do a very good job, and they become very valuable because of that. So there's different types of accretive or definitions of accretive.
Okay, no, it's interesting. I would just really wanted to hear your view on it as well. Like some say, North America only is like an accretive. They define it a bit different than others, right?
Yeah.
So
to me, it's got to be a safe place and a place that's perceived as being able to do work and a place that you actually can do work. So that can be many places.
Okay. One last question before we have a question here on Twitter as well. It's like short-term financing needs as well. Like you took on a loan or some debt for a bulk sample. Would you do that again? Like, how much debt is still outstanding there?
Yeah, so we did a $5 million term loan last year 2 years ago with Royal Bank of Canada, a major Canadian bank. And the reason we did it is we needed an influx of cash to do a bulk sample that was going to be about a $5 million job, basically mini mining, to understand the deposit at Goldboro. So the plan was to do a bulk sample and barge it over to Newfoundland and mill it and find out how much gold is really in it, to make sure we're comfortable with the parameters that we're using for resource calculations. And so we talked to the Royal Bank of Canada, and we ended up closing in 3 weeks a deal that brought us in $5 million term loan at 4.6% interest. I don't think there are. As a matter of fact, I can't find any other juniors our size that get that kind of money that cheap.
Not even majors, and I know a couple.
No, so we approached them again to talk to them, and after the deal was done, and they said that they want this to be a starting point, and they'll perhaps get involved with us depending on how it goes on our future projects. So it just shows the ability for how you can leverage a small asset and how important that small asset is.
Okay, fantastic. And the question we had on Twitter, and I think you sort of answered it, but maybe summarize it as well. And it came in from CL4B. It's all here on Twitter using hashtag AskANX. It's under our video here as well. And the question is, Kevin, you mentioned in past webinars that you would be looking at growing the institutional investors or fund holdings into the company. Do you have a status about that? And what is your strategy to attract them? Like, I think you answered some of that already, but maybe just to summarize it.
Yeah, we're doing much more momentum-based marketing. We're getting bigger in our social programs and our webinars and our virtual conferences that we're going to, and a lot of them we're gearing towards institutional investors. So telling them the story, because we were a company that they wouldn't even look at having a meeting with because we were so small in production. So understanding that we have big growth aspirations, and they're not just arm waving. We have the assets that we have a plan on developing, exploring, etc. So we've got a lot of new groups that are interested in the company. We had some site visits just pre-COVID, and the follow-up visits have not been able to happen. So that's another thing that slowed us down COVID-wise, even though we're doing so well at the operating site. There will be a bigger institutional investment. This started out as a total retail story. We've moved the institutional investors up from, I think, under 10% to 17%, and we'll want to continue to do that. We're all shareholders as management because we're not founders of the company. So I and the CFO have put more than our annual salaries back into the company on the market. So you can check on SETI or anywhere else, and you can see that we're buying all the time. We're not buying right now. That's not because the share price has gone up. It's because we're blacked out until our financials come out. But we continue to buy on the market to get our position, and that puts us totally in line with all shareholders.
Fantastic. What's the date for the financials?
To the beginning, the first week of November or the second week of November. I'm not sure. I'm sorry about that.
Oh, no worries. And one last question. You're based in Toronto, so have you had any meetings lately with analysts or any of the banks? Like I was out in Toronto about 2 weeks ago, and it was pretty much dead on the street. The only place that was active was Earl's. So, and that is closed now too as well. So.
You didn't see me there because I can't get off the phone or off these video conferences. So we're constantly on the phone, constantly talking to people. And I think everybody else is, the bankers and everybody else, so you won't see too many people in their offices in Toronto for that reason. But it's not that we aren't working. It's that we're still working virtually.
No, it's just downtown is dead. So it's
it is. It's completely dead.
It was
and
actually
rightly
scary,
so, because we're into the second wave now. Terrible for the pandemic and everything, but still strong for gold price moving forward. This is going to be much more expensive to solve globally than people think.
Yeah, it's the silver lining and all of that, right? And
yes,
you like how I played on silver and gold there. So yeah. All right, that's it, Kevin. The last 30 seconds are yours to sort of summarize catalysts coming up, and then we're pretty much done here.
Yeah, so obviously through the discussion just now, you've heard how much we've changed the company. It doesn't look like it on the outside, but it's a lot of internal work, a lot of hard work, and we've turned the ship around, and it's going in the right direction now. We're starting to see results. There's a big warrant position in the company that we acquired when we acquired the Goldboro project that come off within the next 3 or 4 months. That will bring in another $4 million of financing. They're all in the money. So we're a very well-funded company that has these growth aspirations. And the key thing I want to point out is we have 5 drills corporately, company-wide, doing over 20,000 meters of drilling on various projects within the company over the next few months. There will be lots of results coming out. And at the end of the year, the new resource at Goldboro, which will be impressive. And then moving forward from there on all our projects. And who knows, in the middle of all that, we may have a discovery hole at Tilt Cove.
Fantastic. Kevin, thanks so much for joining us. It was really a pleasure having you on and catching up with you as well. And everybody else, thanks for your questions. Thanks for tuning in. Make sure to follow us here on Twitter, of course. Hit the alert button. That's the little bell icon in our profile. Follow us on YouTube. Leave a like. Leave a comment. How's Kevin doing his job? Do you like Anaconda? What don't you like? Leave it in the comments. We'll get to those as well. And of course, tell us how we did here as well. And with the interview, this is for the audience. This is not for us. It's really interactive. So appreciate that as well. Kevin, that's it. And we'll talk again very soon.
Always good to speak to you, Kai.